You've seen the headlines. The stock market is hitting all-time highs. AI is changing the world. And everyone who owns tech stocks feels like a genius. But what if I told you it's an illusion? A glitch in the system so massive that it's making the entire US stock market dangerously fragile. Today, we're exposing the AI stock glitch and why just 7 companies could be about to trigger the next market crash. Welcome back to Dollar Glitch. If you watched our last video, you know that Wall Street insiders like Goldman Sachs are warning of a massive volatility storm coming this October. But what's the fuel for that fire? What makes this market so unstable? The answer is something called the Magnificent Seven. Apple, Microsoft, Alphabet, Amazon, Meta, Nvidia, and Tesla. These 7 companies are, without a doubt, some of the greatest businesses in American history. They've changed our lives, and they've made a lot of investors very rich. But their success has created a terrifying glitch in the market. Right now, those 7 stocks make up a staggering 1/3 of the total value of the S&P 500. Let me repeat that. 7 out of 500 companies are worth as much as the other 493 combined. Imagine a football team where 7 players are responsible for 1/3 of the team's entire performance. If just 1 or 2 of them have a bad game, the whole team collapses. That is exactly what's happening to the US stock market right now. And you don't have to take my word for it. One of the most respected investors on the planet, Howard Marks, the billionaire co-chairman of Oaktree Capital, just issued a major warning about this. He's not some random guy on the internet. When he talks, Wall Street listens. And he says the market's valuation has moved from simply elevated to worrisome. And here's where we find the real glitch. Most people think the market is expensive because these 7 AI-driven stocks are so expensive. And they are. Their average price-to-earnings ratio, or P/E ratio, is about 33. That means investors are willing to pay $33 for every $1 of profit the company makes. It's high, but for companies growing this fast, maybe it's justifiable. But that's not the scary part. The real glitch, the part nobody is talking about, is the P/E ratio of the other 493 companies in the S&P 500. Their average P/E ratio is 22. To put that in perspective, the historical average for the entire market is in the mid-teens. This means the entire market is wildly overvalued. The Magnificent Seven aren't just a speedboat pulling ahead, they're a massive tidal wave lifting every other boat into the sky, whether they deserve to be there or not. And that brings us to the most dangerous part of this glitch, the domino effect. What happens when one of these giants stumbles? What happens if Nvidia, the king of AI chips, misses its earnings estimate by a few cents? What happens if regulators in Europe decide to hit Apple with a massive multi-billion-dollar fine? What happens if Tesla's self-driving technology faces a major setback? In a normal market, that would be bad for one stock. In this market, it could be catastrophic for everyone. Here's why. Millions of Americans have their retirement savings in index funds that track the S&P 500. Your 401k is probably full of them. These funds are automated. They don't think. They just follow the index. So if Nvidia and Apple start to fall, these funds are forced to sell. Not because they want to, but because they have to in order to keep tracking the index. That forced selling pushes the prices down even further, which triggers more. It's a vicious downward spiral that feeds on itself. The 7 stocks that made everyone feel like a genius on the way up become an anchor that drags everyone's retirement accounts down to the bottom of the ocean. This is the engine behind the October volatility we talked about in our last video. The market isn't just a little shaky, it's structurally unstable. It's a beautiful skyscraper built on just 7 pillars. And some of those pillars are starting to wobble. So the AI stock glitch is simple. Extreme concentration in a handful of stocks has made the entire market overvalued and incredibly vulnerable to a sudden shock. The very thing that created this epic rally could be the very thing that ends it. But this is only one piece of the puzzle. There's another glitch happening right now, deep inside the Federal Reserve itself. In the next video, we're going to expose the growing civil war inside the Fed and what their internal conflict over interest rate cuts means for your money. Urgent. You are not going to want to miss this. If you want to stay ahead of these glitches and protect your portfolio, do 3 simple things for me right now. 1. Absolutely obliterate that subscribe button. 2. Hit the notification bell so you get the next warning before everyone else. And 3. Drop a comment below and tell me, which of the Magnificent 7 do you think is the most overvalued and why? Let's see who gets it right. I'll see you in the next video. Disclaimer, I am not a financial advisor, and this video is for informational and educational purposes only. All investing involves risk, including the potential loss of principal. You should consult with a licensed financial advisor before making any investment decisions. Past performance is not a guarantee of future results.